An S Corp could save you thousands or become a major headache. Before you make the switch, you need to know both sides of the story. Today, we're breaking down the pros and cons side by side so you can decide if it's worth it to your business. Welcome back to another episode of The Cozy CEO. Well, hey there. I'm Kimberly Ferguson, CEO and founder of The Emerald Edge. I'm so happy that you're here. The Emerald Corner is a place where owning a business means building a life you love, not sacrificing one. Today's video is all about evaluating whether an S corporation is a good fit for your business. Let's dive into a not ready versus ready format for each factor so that you can see the full picture side by side. But before we do that, I want to tell you a story. I recently had a client come to me who had made the switch to becoming an S corporation, and they ended up feeling frustrated, overwhelmed, like they were spending more time and more effort and more money on this corporation than they were before when they were just a sole proprietor.
This is the worst.
And the reason that this happened is because their advisor or their accountant, whoever was assisting them, didn't take the time to go through a checklist like this and really make sure that the S corporation was right for their specific business. So don't let that happen to you. Okay. So number one is business size and revenue. If your revenue isn't consistent or you're still in the early stages of business, managing an S Corp can be a hassle. You'll need to pay yourself a reasonable salary and cover payroll taxes, which may not make sense if you're not earning enough to justify the extra work. But if you're making around $100,000 or more consistently, an S Corp can help you save significantly on self-employment taxes by splitting your income between salary and distributions. So number two is administrative complexity. S Corps require more formalities. Think annual reports, corporate minutes, and shareholder meetings.
Wazowski, you didn't file your paperwork last night.
For solopreneurs or small teams, this can feel overwhelming really quickly. But for business owners who are ready for more structure, these extra steps can create healthy discipline in your finances and prepare you for future growth. Number three is professional support. Handling an S corporation solo can be risky business. The complexity of payroll and tax filings increases your chances of making costly mistakes. However, if you already work with or you plan to hire a trusted financial professional, an S corporation becomes much easier to manage, and they'll help you stay compliant and maximize the benefits of that S corporation. And number four, extra tax filing and costs. An S corporation requires a separate corporate tax return to your individual return, which could cost you $2,500 or more, depending on the complexity. This added expense might feel like a little bit too much if your business is already on a tight budget. On the other hand, if your profits are healthy, the tax savings can easily outweigh the costs of the filing, and the investment is well worth it in the long run. Number five is payroll requirements. As I mentioned, an S Corp requires you to run payroll and pay yourself regularly. If your business income fluctuates wildly from month to month, sticking to a fixed payroll could become really stressful. And also, as I mentioned, the reasonable compensation earlier in the video, that is just an arbitrary word that was completely made up by the IRS.
What?
And unfortunately, there's no document that you can look up that shares with you what exactly reasonable salary would look like for you. So you have to spend even more time doing the research and figuring out what your reasonable compensation is going to be. And we also can't just say just because somebody else in your field is paid this way, that means that you should be paid that much. We have to have documentation and evidence to back up your claim. But if you have a stable income, the payroll requirement can actually bring more predictability to your finances and make tax season a little bit less stressful for you. And lastly, ownership flexibility. S Corps come with shareholder limitations. No more than 100 shareholders and only certain types of entities can be owners in an S corporation. So this can limit your options if you plan to expand your ownership or even maybe go public one day. However, if you're a small business owner who values keeping things streamlined and maintaining control, these restrictions can help you stay focused and avoid unnecessary outside interference. So, is an S corp right for you? It really depends on your business's current size, income consistency, and your willingness to handle the extra structure and costs. If you're unsure, don't go it alone. Consult a tax professional who can give you personalized advice. Well, thank you so much for spending just a few minutes of your time with me today. I hope you have a fantastic day, and I'll see you in my next video.